Hey, good morning, everyone. Welcome back to Principles of Accounting 2 for our second online session. I will be your host, Dr. B, as always. Today we're going to be covering Chapter 23. Last week we covered Chapter 22. If you had missed the session on Chapter 22, you are able to access the recording that was posted in the classroom in the announcements. I have created a YouTube channel that hosts all of our recordings. So if you need to go back and listen or rewatch anything that was presented in any of the chapters, you'll be able to do that. And I'll share that link with you all again. At the end of this session, it usually takes a few hours, there will be an automatic email that's sent out with the recording. And again, I'll make sure that that's shared in the both in the classroom and on the YouTube channel as well. In Chapter 22, we did cover quite a bit. And now in Chapter 23, it kind of builds a little bit on Chapter 22 with respect to performance evaluation. Chapter 23, we focus a little bit more on the operations side of things, a little bit less of the accounting component, but a little bit more on the operations to kind of bring the two together. In Chapter 23, we cover centralized and decentralized operations. As you may recall from earlier chapters, a centralized operation is where everything is basically top down from the top level of management down. We call that a centralized operation. Everything's pretty much happens, all the decisions are made in the same place. In a decentralized operation, decisions are made at the managerial level for each respective department, and we'll talk a little bit more about that in detail. So I'm going to go ahead and share the PowerPoint presentation. If any of you have any questions along the way, please feel free to unmute yourself and ask your question. Okay, so let's jump into it. So let's talk about centralized and decentralized operations. In a centralized company, all of the major planning and operation decisions are made by top-level management. This would include people like the CEO, the COO, the CIO, any of the key players in the C-suite, as we call it in management. These are people at the very top of the organization. So in a centralized planning company, all of the major decisions are made by top-level management. In a decentralized company, managers of separate divisions or units are responsible for the decisions. These are like departmental level managers. If you think about it from an organization like Macy's, I know we used that a few times in previous examples. So think about Macy's. Think about the way that the store is structured. You have your store manager, which would be the top level, and then you have, if y'all wouldn't mind just muting yourselves, there's a little bit of background noise, please. Thank you. At the top level, you have the store manager who makes decisions at the store level, and then you have departmental managers. At the department managers, you have places like the electronics department. You have the store manager. You have the clothing department. You have the manager. You have the manager of the jewelry department, so forth and so on. And each departmental level manager has the ability to make decisions in a decentralized organization. The division unit managers are responsible for planning and controlling the operations of their divisions, which are structured around products, customers, or regions. Okay, so as you would think, there are some advantages and disadvantages of running a decentralized operation. For large companies, it's difficult for top-level managers to maintain daily contact with all of the operations. And it's also challenging to maintain operating expertise in all product lines and services. So because it's difficult for the top level managers to do that, they rely heavily on the departmental managers. In these cases, delegating authority to the managers closest to those operations usually results in better decision making. So if you think about it from our example of Macy's, if let's say I'm the store manager, and I would rely on my department managers to make better decisions because they're closer to the operation. The store manager cannot be focusing on one department at a time. That's not an efficient way of managing. So the store manager would have to rely on department managers to make better decisions around things like the products, the services, and the customers. So a few more advantages of decentralized operations. These type of operations provide excellent training for their managers. As you would expect, if you're a department level manager, you want to have the best training possible to be able to make decisions at the department level. Delegating the responsibility from the top level management to the department level management allows for managers to develop a managerial experience early in their careers. This helps a company retain managers, some of whom may be later promoted to top-level management positions. So, for example, let's say we have a department manager at Macy's who is in charge of the jewelry department, and they are gaining a lot of experience because they're able to make decisions at the jewelry department level. And because they're able to do that, they're gaining experience. And this would help to provide that jewelry department manager with experience. And the more experience that they gain, they would be able to gain that knowledge and that experience to eventually be promoted to maybe like an assistant store manager or to a store manager. And so that type of delegation really does help managers advance in their careers. And of course, we have managers of decentralized operations. They work very closely with the customers, as you might expect. So department level managers work very closely with their customers. As a result, they tend to identify with the customers and are often more creative in suggesting operating and product improvements. So, for example, let's say you are a department manager of an electronics department within, like, Macy's, for example. And because you are the department manager, you can be more creative with offering product improvements. Or you might say, hey, we need to substitute this one product that we're selling with another because it just isn't selling well. Maybe it's out of favor, or it's no longer relevant. And you can also establish really good relationships with your customers because you work closer in that
Professor, I'm sorry, Professor B, someone needs to mute their phone.
Okay, let's if y'all wouldn't mind.
I'm sorry.
Oh, no, thank you. I appreciate you saying that. So for those users who called in, if you could mute your phones when you're not talking, that would be great. Okay. Thank you so much. Okay. Any questions on the advantages of decentralization? Make sense? Great. Wonderful. Thank you. Okay, so now let's talk about the disadvantages of decentralization. The disadvantages include things like operations from decisions that are made by managers may negatively affect the profits of the company. So going back to our example, if you're a department manager of Macy's and you manage the electronics department, you might make a decision that might have a negative impact on profits by selecting products that have smaller profit margins than their substitutes. So if you select a product that has a lower profit margin, that might have a negative impact on the total company's ability to generate profit. Another disadvantage of decentralized operations is that assets and expenses may be duplicated across divisions. So if you have two different departments that are relatively similar, let's say it's clothing, sometimes you might be duplicating the operations. So instead of sharing resources like personnel and clothing, if it's decentralized, you may not know that you're duplicating the assets and expenses, by using the same personnel to do two different things. So that's a disadvantage of decentralization because you're not sharing resources with other departments. So here's a little bit more to that. So again, advantages include things like managers are closer to operations to make decisions. Their decision making is typically better. They provide excellent training for managers, where managers eventually become experts in their area of operation and can eventually be promoted. It helps to retain managers because managers feel the responsibility, and when a manager has more responsibility, they feel more valued. It also improves creativity for customer relations. So those are the advantages. Disadvantages would include things like decisions made by department managers can have a negative impact on profits, and the duplication of assets and expenses. So now that we've covered the advantages and disadvantages of decentralization, let's talk a little bit more about responsibility. So in a decentralized business, accounting assists managers in evaluating and controlling their areas of responsibility. These are called responsibility centers. So think of like the accounting department as being the third party, if you will, right? And that third party assists the managers in helping control their areas, just like they would with a centralized operation with the store managers. So responsibility accounting is the process of measuring and reporting operating data by responsibility center. Think of the responsibility centers as being the various departments. Three types of responsibility centers include things like cost centers, which are responsibilities over costs, profit centers, which are responsibilities over revenues and costs, and investment centers, which have the responsibility over revenues, costs, and investments. So think of these as different levels. The cost center is only responsible for managing the expenses of that respective department. A profit center within a department is responsible for managing both the revenues and the expenses of that department. An investment center, which we think of it as being the larger component, is responsible for the revenues, the expenses, and the investments in assets. So an investment center department might also be responsible for the purchase of additional inventory. Does it make sense? Any questions so far?
No, not yet.
Great, thank you. Okay. So a cost center manager has the responsibility of controlling their costs, just as you might think. However, the cost center manager does not make decisions concerned with sales or the amount of fixed assets invested in the center. In other words, a cost center manager is only responsible for the expenses generated in that respective department. They do not make decisions based off of the sales price for the inventory that are in that department. They also cannot make decisions to purchase additional inventory for their respective department. So going back to our example of an electronics department manager at Macy's, that person cannot make decisions on the sales price of the inventory that they're selling. They cannot make decisions based off of the inventory that they need to purchase for their department. That's only if their responsibilities only include cost center management, which is the control over the expenses, not over the sales price or the purchase of additional inventory. Cost centers may vary in size from small departments to entire manufacturing plants. as you would imagine, as the difference in companies. Different companies have different sizes, so therefore, individual managers that manage a cost center would have different size responsibilities within the cost centers, depending on the size of their organization. Cost centers may exist within other cost centers. So what this means is that you might, within, like going back to our example, in Macy's, the electronics department cost center manager, there might be smaller granular cost centers. Like, for example, the TVs within the electronics department within Macy's might be a cost center all its own. Does that make sense? Yes? Great. Okay, so here's another example. Let's look at it from a university perspective. So we are in the Division of Business or College of Business within our university. That's where this class belongs to. If you break out the College of Business by departments, you have marketing, accounting, and management. This course belongs to the Department of Accounting. The course would be the more granular level. So if you think of it from the perspective of the department, we have the cost center is the department, the college might be the store, the university would be the whole corporation. So at the department level, we have our Department of Accounting, which includes all of our accounting courses. And then this class itself might be a cost center within the department. Does that make sense?
Yes.
Yes. So it's a nice visual representation. Okay, so let's talk about the responsibility within the cost centers. Responsibility accounting for cost centers focuses on controlling and reporting of costs. The budget performance reports the report budgeted and actual costs that are normally prepared to each cost center. In other words, as you would expect, and as we discussed back in chapter 21, when we talked about budgets, we did mention that in some organizations, especially the ones that are decentralized, each department has their own budget. And I told you about the time when I was working at Radisson Hotels as the controller. What I had to do is I approached each department within the hotel to have their own budget. So I had my maintenance department, my rooms division, I had the food and beverage division, and I also had the back of house, right? And so within the hotel, you have all these different departments. You got front of house, back of house, rooms division, maintenance, so forth and so on. And so what I had to do is I asked each department manager to formulate their budget, and that budget would have their estimated costs for each cost center. So, for example, if you look at your rooms division, in rooms division you have your guest rooms, but you also probably have something like housekeeping, and you also have maybe room service, right? So your housekeeping, your room service, and your guest rooms, all of those are different cost centers. Okay, so if you think of it from that perspective, does that make sense?
Yeah.
Great. Okay, so here's another visual. If you look at it from this hierarchy, at the top level you have your VP of production. They're responsible for both Plant A and Plant B. Within Plant A, you have a plant manager, and that plant manager has 3 departments within the plant, and then each department might have a department supervisor. So this is kind of how the hierarchy structure might look. So let's look at it from a numbers perspective. So in that example, there's 2 plants that make up the entire organization. And you can see from this graphic that each plant has its own budget, and then each department within each plant has its own budget. And so that's kind of how this hierarchy structure looks. Okay, here's an here's an exercise. Let's say we have this power company, and this power company has a budget of 24,000, and they were over budget by 24,000. Okay, so their budget was less than that. The company is divided into 2 regions, north and south. The north region costs were under budget by $2,000. How determine the amount that the south region's costs were over or under budget? What do you think? Was the south region over or under budget, and by how much? Any guesses? Any thoughts?
I think it's gonna be 22,000.
22? And is that over or under?
Over.
Over. Okay. Any other guesses?
26.
26. And is that over or under 26?
Under.
Under. Any other thoughts?
We did this on the day on homework. I'm trying to remember.
Sure did. Okay, so let's break down the question. Okay, the power company's costs were over budget by 24,000. Okay.
So it's gonna be 2,000 over, because we can divide it the $2,000 that the northern region cost got $2,000, 2,000 under, right? And overall they have 24 over budget, but the northern region is under budget of $2,000. So we just gotta divide the 24 out of the 2,000, then it's gonna be 22,000, right?
And not quite, but you're on the right track. So let's break it down a little further, okay? So the whole company's over budget by 24,000.
Mhm.
The company's divided into 2 departments, north and south. Okay. The northern costs were under budget by 2,000. The question says, determine the amount that the south region's costs were over or under budget. So based on the first sentence, we know that it's over budget.
Yes.
Okay.
Oh yeah.
Sure, the whole company's over budget. So that means clearly the South Division's over budget, right? So we're over budget. That part we know. It says the whole company was over budget by 24,000.
Yes.
The North region was under budget by 2,000. So if I were looking at this, I would say, okay, well, we know the whole company's over by 24. This
2,000 under.
You think 2,000 under? Oh,
2,000 under.
you're on the right track, but let's break it down a little bit further.
We divide the 24 by both regions, right?
No. Nope.
Over of the over budget for the whole company, they have 24,000 over budget, right?
That's correct. So the whole company is over budget by 24,000.
Okay.
Okay. The company has 2 different departments, north and south.
Yes.
The north part was under budget by 2,000. How much was the south region over by?
22,000.
Almost.
It's gonna be 26,000.
So
It's gonna be 26,000.
It's going to be 26.
Yeah,
Okay.
because you got to add the 2,000. Yay!
Yeah. You're over by 26,000. Okay.
And divided the northern region.
Right, exactly. So the whole company is over by 24,000. That we get. If we're saying that the North region was under by 2,000, that 2,000 must have been shifted to the South region.
Yes, yes.
So
It's
therefore,
already
the
shifted.
South
Yeah.
region was over budget by 26,000. Make sense?
Yes, I get a point for that, Professor.
Hey, yes, you do.
Me too.
Wonderful. Great. Okay. That was a good one. Don't worry. We'll have a better example here in the future, here in the near future. Okay. So let's talk a little bit more about responsibility accounting for the profit centers. We talked about the cost centers. Now let's talk about profit centers. A profit center manager is responsible for the authority of making decisions that affect both revenue, costs, and thus profits. So remember, looking at your income statement, revenue minus expenses equals net income, right? Net income, net profit. Yep. Profit centers may be divisions, departments, or products. Manager does not make decisions concerned with the fixed assets invested in the center. So in other words, the profit center manager is concerned with the revenues and expenses that ultimately generate profit. So what that tells me is that the profit center manager is probably responsible for setting the prices of individual products or services. And that also tells me that the profit center manager is responsible for minimizing their expenses as much as possible to make the greatest profit. What this also tells me is that the second item here says the manager does not make decisions concerned with fixed assets invested in the center. In other words, that profit center manager is not responsible for purchasing additional inventory. So let's look, we'll look at that here a little bit, an example. Responsibility accounting for the profit center focuses on reporting revenues, expenses, and thus net income from operations. The responsibility accounting reports for profit centers take in the form of the income statement. Again, when we're dealing with a profit center manager, essentially they're responsible for the revenues, which is the sales, right? Your costs, which are expenses for that respective department, and the income from operations. Now remember, your revenue minus your sales, or I'm sorry, your sales minus your expenses gives you your income. And so we can derive profit from income. So again, think of it of your income statement. The profit center income statement should include revenue and expenses that are controlled by the manager. Now, remember back from chapter 21 and a little bit in chapter 22, when you hear the word controllable, it means it's within the control of that respective manager. That manager can control the amount of revenue and expenses being generated in that department. Controllable revenue are the revenues earned by that profit center. Controllable expenses are the costs that can be influenced or controlled by the decisions of the profit center managers. Any questions so far on the profit center?
No.
No? Great. Makes sense. Okay. We're getting closer to our example, I promise. These next 9 slides are a little bit dry, so we'll roll through them. The control. Okay, so let's talk about service department. Controllable expenses of a profit center include direct operating expenses such as sales, salaries, and utility expenses. In addition, a profit center may incur expenses provided by internal centralized service departments. These would include things like research and development, also known as R&D, legal, which are your attorney's fees, telecom, which are your internet and telephone expenses, information computer systems. These are your computer expenses, softwares, and such. Facilities management, these would be your manager's salaries at the facility level. Purchasing for inventory. Advertising to help generate more sales. Payroll accounting, these are your accounting department expenses. Transportation and human resources.
Dr. B, department charges are charges that cannot be right?
It cannot be what? I'm sorry. Touch. So what service department charges, these are basically, how do I want to describe this? These are the supporting expenses of the entire company, right? And so these are basically like indirect. These are like your indirect expenses, right? For your department level. And so a lot of these are fixed expenses, with the exception of course, utilities. But so in other words, a portion of these expenses would be attributable to the department. Does that make sense?
Yes.
Great. So let's dive a little bit deeper. So service department charges are indirect expenses to the profit center. They are similar to expenses that would be incurred if the profit center purchased the services from an outside company. Profit center managers have control over the service department expenses if the manager is free to choose how much service is used. So again, so like Marcus and I were just talking about, these line items, R&D, legal, telecom, so forth and so on, a portion of these are attributable to the department, okay? And it's up to, what this is basically saying is it's up to the department manager to tell us what percentage of that is attributable to that respective department. So in such cases, a service department charges are allocated to the profit centers based on the usage of service from each profit center. So here's an example. Let's say your department only operated 30% of the time. And so because your department only operated 30% of the time, I can then allocate 30% of the electric bill to your department. I can only allocate 30% of the lawyer's fees to your department. I can only allocate 30% of the rent to your department, so forth and so on. Does that make sense?
Would this be a part of the cost budget? Would that be an example of it?
Yes, Mark, absolutely right.
All right.
Yep. Right. Okay, so here's an example. Nova Entertainment Group. Let's pretend that it's really Disney. I like Disney. It's a nice company. Okay, so Disney is a diversified entertainment company. It has the following two operating divisions organized as profit centers. You have the theme park division of Disney, and you have the movie production division of Disney. So here are the revenues and direct operating expenses for Disney. For the theme park division, your revenues were $6 million. Your operating expenses were $2.495 million. Your movie production division was $2.5 million, and your operating expenses were $405,000. If this were really Disney, this would be daily, okay? So think of this per day for Disney. The operating expenses consist of direct expenses, such as wages and salaries of the division employees. That makes sense. Now, Disney's service departments and the expenses they incurred for the year are as follows. Well, if you multiply this by like 10, it's really Disney, okay? Purchasing expenses were $400,000. Payroll accounting expenses were $255,000, and legal expenses were $250,000, to give us a total service department expenses incurred for the year of $905,000. An activity base for each of the service department is used to charge service department expenses for the theme park and movie production divisions. The activity base for each service department is a measure of the services performed. For Disney, the service department activity bases are the following. Let's say the department you have is purchasing. The activity base will be the number of purchase requisitions. If the department is payroll accounting, the activity base would be the number of payroll checks. And the department's legal, it would be the amount of legal hours billed. Okay. So this is activity-based costing. I think we discussed this a little bit in chapter 20, 19 and 20, I think it was. So it was a while ago. Activity-based costing is the premise for this. Everyone's good so far? The example's going to keep going.
Yes.
Great. Okay, so let's break that down. The use of services for the theme park and movie divisions are as follows. The theme park purchased 25,000, had 25,000 purchase requisitions. They utilized 12,000 payroll checks, and they were billed 100 hours for legal. The movie production division had 15,000 purchase requisitions. They issued 3,000 payroll checks and were billed 900 legal hours. The total purchasing, total purchase requisitions for the company were 40,000 purchase requisitions. The total payroll issued for the whole company was 15,000 checks. And for legal, the whole company was billed at 1,000 hours. Everyone's good so far? Yeah, good.
Yeah.
Wonderful. Okay, so let's break it down. The rates at which services are charged to each division are called department charge rates. These rates are computed by the following. We take the service department expense by the service department usage. Okay, so let's look at the purchasing. For purchasing, the total amount was 400,000. We divide that by the 40,000 purchase requisitions to get us a $10 per purchase requisition. So going back to our previous slide, we noticed that the 40,000 total purchase requisitions for the company. So that's the amount that we take, and we divided that by the we took the total amount that was billed for purchasing, divide that by the total requisitions to get us a $10 per requisition. We apply the same concept for payroll and legal. We say that payroll is $255,000 total for payroll. That the check amount was total checks were 15,000. That's $17 per payroll check. For legal, 250,000 was the total bill, and 1,000 total billable hours. That's $250 per hour for legal. So clearly, we didn't pay people $17 per check. That would be terrible. This is the cost it takes to issue each check. Does that make sense?
Yes.
Yes? All right, good so far. Wonderful. So to determine the service department charge, we take the services used by each division and multiply that by the department charge rates to determine the service charge of each division. So to do that, we take the service usage and multiply that by the service department charge rate. So going back to our example, let's look at purchases. We got $10 per purchase requisition, and our purchase requisition for the theme park was $25,000. So that would be 25,000 requisitions times $10 per requisition. That would give us our service department charge for that. And here's how it looks. For purchasing, the theme park had 25,000 purchase requisitions at $10 per requisition to get us to the 250,000 for requisitions for the theme park. Good so far?
Yes.
Great. For the movie division, requisitions were 15,000 at $10 per requisition. That's 150,000. For payroll, the theme park issued a 12,000 checks at $17 per check. That's 204,000. For the movie division, we issued 3,000 payroll checks at $17 per check. That's 51,000. For legal, the theme park was billed 100 hours at $250 per hour. That's 25,000. And the movie division was billed 900 hours at $250 per hour. That's 225. And then we total all of it up for each division. The theme park at 250,000 in purchasing. The payroll was 204,000. Legal was 25. All that added together is 479,000 for the theme park division and total service department charges. For the movie division, we had 150,000 purchasing, 51,000 payroll, 225,000 legal to get 426,000. Good so far?
Yes.
Great. Wonderful. Oh, we did well. Okay. This example is not as good, but we'll go through it. Okay. The centralized legal department of a company has $600,000 worth of expense. The department has provided a total of 2,000 hours of service for the period. The East Division used 50 hours of legal service during the period. The West Division used 1,500 hours. How much should each division be charged for legal services?
$300.
$300 is it? So how did you come up with that?
600,000 divided by 2,000.
Great, perfect. So that is the hourly rate, right?
Yeah.
So 600,000 divided by 2,000 hours gives us 300.
Yeah.
So $300 is our hourly rate. So how do we figure out what each division should be charged?
You multiply 300 by each division.
That's correct. So we take $300 times 500 for the East Division. And we take $300 times 1,500 hours for the West Division. So that's how this looks. Oh, sorry. So for the East Division, 500 hours times the $300, which would be the 600,000 divided by 2,000, to get us to 150,000. So that's $300 times the 500, 150,000. 600,000 divided by 2 is 300. So the $300 times the 1,500 hours to get 450,000. Everyone sees how we got there?
Yes, he's still at all my points.
just Ricky, just gotta hit the gas pedal. You gotta be a little quick.
Yeah, I want some points too.
Yeah, you gotta get those points. Okay, so let's go back to our example, our Disney example. I just like being Disney because I think it's a wonderful company. Okay, so this is our income statement by division. So remember, since it's decentralized, each division has to have its own form of an income statement, right? And so our theme park division has six million in revenue. Our operating expenses were 2.495 million. Our income from operations before our service department expenses. So what we do here is we take our revenue minus our operating expenses, take our income before our service department charges. So that would be 3.505 million. And then we have our various service department charges. We have purchasing, 250,000. Our payroll for accounting was 204,000, and our legal is 25,000. We add those all up together to get our total service department charges of 479. And so what we do here is once we have our total service department charges, we take our income from operations before the charges, 3.505, subtract out our 479 to get us to 3.026 for our income from operations. And then we would follow the same process for our movie division. Everyone sees how that works?
Yeah.
Wonderful. Okay, so let's talk about the profit center reporting. When in evaluating the profit center manager, the income from operations should be compared over time to a budget. So just as we learned in the previous chapter, every single month or every single quarter or semi-annual, we want to make sure that we are continually evaluating our benchmarks, right? And so from this perspective, we're looking at our income from operations compared over time. We want to compare that to our budget. And this helps us to really evaluate the performance of our profit center manager. However, we don't want to compare that across different profit centers because different profit centers behave differently. So going back to our earlier example with Disney, I would not want to compare my profit center manager for the theme park to the profit center manager for the movie division, because the reality is they behave differently, right? They're two different divisions. So I really don't want to compare those two side by side. I want to compare each one on its own merits on a month-by-month basis, or a day-by-day, month-by-month, quarterly, semi-annual, annual, whatever. But in other words, we want to keep those two separate when we're making comparisons to determine the performance of each division. Does that make sense? Yes. Great.
Yeah.
Wonderful. Okay. Time for another exercise. Okay, using for Johnson Company below, determine the divisional income from operations for the East and West divisions. The internal service charge for the legal department was $150,000 for the East division and $450,000 for the West. So who can tell me for the East division what is the income from operations?
You mean like
Say that again, please.
What is the income from operations for the East Division with this data?
It's
from the what division?
1.3 million and 50,000.
1.3 and 50,000?
Yeah.
Let me see. That sounds a little high, but let's check.
Are you asking for the gross income?
That's
I'm
the
asking
income,
for
right?
I'm asking for the income from operations. So income from operations,
Would be gross income minus selling expense minus
Oh,
the
okay.
support department. The support.
exactly. So we have our 3 million in sales minus 100
Minus, okay.
minus our selling expenses of 850 minus our legal, which is 150. Should give me to 350,000, right?
Yeah, 350,000 for the East Department.
Great. And how we got there is we took our sales minus our cost of goods sold, minus our selling expenses, and minus our legal department fees. Wonderful. Okay, and I think you'll see that again probably on homework, if I'm not mistaken. Okay.
You go to fun stuff, man.
Yeah, fun stuff, exactly. Okay, so let's take a look at our responsibility accounting for the investment centers. So we covered our cost centers, then we covered our profit centers. Now let's talk about our investment centers. An investment center manager has the responsibility of making decisions that affect not only the costs and revenues or expenses and revenues, but also the assets for that center. So for an example, this type of manager has the ability to make decisions for sales, which is revenues, our expenses, which are our costs, and our assets, which is our inventory. Okay. The investment centers are often used in diversified companies by divisions. In such cases, a divisional manager has the authority similar to the chief operating officer or president for a company. In other words, the investment manager is above our profit manager and is also above our cost manager. So think of this as being like the department manager, and then below that you have the department supervisor, and then below that you have the I guess would be like the individual department manager, you know, the smaller, the more granular level. So because investment center managers have responsibility for revenue, expenses, the income from operations is a part of the investment center reporting, as you would think. Again, think of this as looking at your income statement. In addition, because the manager has responsibility over the assets in the center, the following two additional measures are reported: the rate of return on investment and residual income. Think of your rate of return on your investment as being your inventory turnover, right? How quickly the inventory is turning over. The residual income, meaning the additional income generated from the sale of your inventory. So here's an example. So this company is divided into three different divisions. You have your north, your central, and your south. Each division has their revenue, their operating expenses, their income from the operations, and of course they also have their service department charges, and then their income from operations, just like we saw before. But now let's talk about the differences. So again, we're talking about the investment center managers. So because investments, I don't know if I want to jump into this one. This part's long. You know what? I think it's 12 o'clock. these next 13 slides are going to be really, really detailed, and it's we're at the halfway point right here.
Yeah, let's do it next week.
Yeah, well, let's do it on Thursday. I don't know about next week, but definitely on Thursday. So we are at the exact halfway point for the chapter. I want to give you all some time back for the class before you all move on to your next classes, if you have any left for today. I do want you all to have some time to work on your homework. Please finish up chapter 22 before you jump into 23, because again, chapter 23 builds on what you learned in chapter 22. So let's stop here for today. We'll cover the rest of chapter 23 on Thursday. In the meanwhile, as always, if you have any questions, please let me know. Does anyone have any questions right now from what we just covered?
No.
No, but I do have a question. Do you think we
Please.
school on the 6th?
I'm sorry, what was that, Val?
Do you think we coming back to school on the 6th? Because, you know, they closed DC to the 17th. So do you think we actually coming back to class on the 6th?
It's possible. It really depends on what's going to happen around here in the next 7 days, is my guess.
Because I talked to my brother. He works at Catholic University, and he was telling me that they are planning on closing most of the colleges down for this semester and just finish doing the work online. The graduates might get to come in to graduate and probably be tested before they do.
I've heard that same thing. So it's really up in the air, honestly. I think we'll know more probably in the next 7 days, as we get closer to see what everyone else decides. Because ultimately, it's really up to the mayor to make that decision.
She already extended the DC public schools to the 17th, 24th of April.
The 24th, yeah.
Exactly. So my guess is that UDC will follow suit, but again, we just have to wait until that announcement's made.
Yep.
So plan on the 6th, but but I kind of don't think so. But it's just my thought.
Cool, Professor.
Okay, see y'all.
Right. So if there's no other comments, questions, or concerns, I wish you all have a wonderful rest of your day, and I'm looking forward to our next session on Thursday.
Yes, we are too, Professor.
Wonderful.
Hey, Professor Lumpkins, so this in learning module 6, right?
No, it's 5.
This one is going to be located in module 5.
Yes.
Oh, okay.
Okay, great. Okay, so if there's no other comments, questions, or concerns, I'm going to stop the recording, and I hope you all have a wonderful rest of your day.
You too. Thank
everybody.
you.
Be safe.